We could see silver spike and pop and really take off to 100. We actually hit 82.50 just 2 days ago, and then it sold off fairly dramatically. We could have a big reversal at any point. It's like a bearish engulfing candle. The red body completely engulfs the previous day. I wouldn't say it's over. All it is telling us is like, things are getting really wild. We've seen margin increase twice on silver, kind of a warning flag in my head. I'm watching this chart like a hawk, along with other metals here, because I'm potentially going to be liquidating some of my metals at some point. If margin requirements go up, they have to liquidate all kinds of different positions just to cover their silver positions and things like that. It's going to become the new floor for silver. Maybe down to 40 to 50 will be the new floor. Right now we're in bubble phase. So silver can pop and take off. And I do still think we could see one big push in silver. Could spike potentially, past 100. I still think we could see gold move up to 51, 5,200, and then I think it's going to pull back. I think that's going to happen in 2026.
Silver has had a monumental run in the last week, running up to $80 and then falling, I think, double digits, 15 to 16%. It hasn't fallen this much in a single day intraday trading session since, I can't remember the year, but it was a long time ago. So this very sharp rise to 80 and then a very sharp reversal back to 72. I mean, it's still high, right? It's still like 72, but the quick reversal, that was a scary drop. And now silver is stabilizing around 75. So big green candle, then a big red candle, and then a smaller green candle is what I see on my screen. I'll let you share your screen and walk us through what you're looking at here.
Yeah, well, there's definitely been some pretty amazing moves in the precious metal space. I think all of us have been waiting years for everything, especially silver, to really pop. And of course, silver has done that. As you just mentioned, if we look at the last three candles that we've seen, we saw like a 11% rally one day, then a massive reversal. We actually had $82 as my kind of blow off spike high, and we actually hit 82.50 just 2 days ago, and then it sold off fairly dramatically. And now we're getting that bounce. So there's a lot going on. It's not just in silver, it's in the whole precious metal space. You and I have touched on this, that when you look at the comparison of 2007 and what miners have done, what platinum, palladium, and silver have done, we're definitely seeing everybody starting to really move into this space who wants to get in. And it is starting to feel really frothy. As exciting as it is, and people think it's just getting started, the charts are actually showing signs that it's actually starting to become exhausted. And this type of red bar, that is a pretty scary red bar, is one of those signs that we're getting close to maximum kind of volatility and some type of blow off top. Now, there are reasons for this. We saw silver have a margin call a little while ago, increase in margin. We also saw it again yesterday, which is, I think, a very big reason why we saw precious metals across the board sell off. Whoever's in silver, they're generally into a lot of other metals. And if margin requirements go up, they have to liquidate all kinds of different positions just to cover their silver positions and things like that. So we saw a lot of selling yesterday, based, I think, a lot on the margin requirement that was increased on the COMEX. But, when we look at a couple of these other plays real quick, like platinum, if you look at platinum, look at the big kind of volatility. We saw percentage-wise, in like a 4-day window, it moved up 22%. In a 1-day window, it dropped 18%. And we still have the similar type of price action for palladium. And of course, just huge price action. Of course, everybody's talking about it. Everybody seems to be wanting to get into this space. Who is open to investing? I'm not saying all investors are moving in. I'm just saying those who are more or less open to the concept of adding and trading precious metals, they seem to all be piling in. And when they do that, we get into this back and forth price action. And silver is very exciting. I mean, I own a lot of physical silver. I now have kind of a warning flag in my head. I'm watching this chart like a hawk, along with other metals here, because I'm potentially going to be liquidating some of my metals at some point, depending where the market caps out. So People need to be aware this type of volatility is usually a sign that we're getting close to an end, but some of the biggest moves percentage wise do happen at the very end of a trend. We could see silver spike and pop and really take off to 100. It's not about trying to pick or nail a top. It's about just following the trend. The trend is clearly still up. It had a big down day, but it's recovered and now it's back above the 5-day moving average. So the trend is still firmly to the upside. It's just got a lot of volatility in there now.
Whenever you see, just from a technical perspective, anything move up and down like this, let's just take silver and palladium as examples because you have both of them on your screen. And you've got these big red bars followed by a smaller bounce. What do you do with that information? Because on the one hand, you've got this continuous uptrend that's still intact. And on the other hand, you have this giant one-day washout, or maybe multi-day in the case of palladium, that was followed by some sort of consolidation and then a slight bounce up. Does that signal to you that the rally is over? Is that why we had that giant red bar, Chris?
I wouldn't say it's over. All it is telling us is like things are getting really wild. We've seen margin increase twice on silver. It just means there's a lot going on and we need to be aware. We could have a big reversal at any point. Now, you're right. This type of bar, when it gaps higher and then pushes up and then gets slammed down and closes below the previous day, that is like a bearish engulfing candle. The red body completely engulfs the previous day. It went higher. It closed below it. It's usually a reversal candle. Now, a reversal candle is only good for 1, 2, or 3 more bars after it. It doesn't, specifically mean it's the top for silver. The big thing with this inside bar, as you mentioned, this big red bar, is now price is going to trade sideways in here for a little while, and we need to see which way it's going to resolve. You're right. This is a bearish bar. Price might consolidate sideways here inside this range, and it could easily break down and have a bigger pullback before it maybe wants to go higher. And there's a really good example. Like if we just take a look at silver and use the Fibonacci extension here, we go from the low that we had over here. We had this big run up, this peak, and then we come down. And we talked about, maybe, I don't know if I talked about it with you. I probably did. But we had this target around 72 to the upside for silver. And that is the Fibonacci measured move, just based on this move up, the big correction, and then, of course, the 618 and the 100%. And once you hit that level, that's a level we locked in 20% gain. We were long an SLV trade with one of our strategies. We closed out a trade there. And then, of course, price got into this kind of blow off phase, this emotional move. And this is what happens when you hit these Fibonacci targets and then suddenly the crowd jumps in and creates this volatility. That means the price charts are painting a very clear picture of what's going on.
I've heard silver could go as high as $100 in 2026 before a reversion. The fact that it's seen significant resistance at 50, sustained above 50, and then now we're seeing obviously resistance at 80, I wonder how likely 100 is. Now, of course, the higher it goes, the more likely $100 in triple digit silver it becomes because the percentage gain is smaller. The elusive $100, what needs to happen for the price to hit that target this year, Chris? If it will, maybe that's not your view.
Well, yeah, it depends on how you look at it. I do think silver could spike dramatically higher. I mean, when you look at the log scale and this giant bull flag pattern, I mean, this isn't a pattern I've ever really showed anywhere because it does point to some crazy high pricing for silver. So based on this run up from the 2000 low and the big pullback, it's really just breaking out of the high that we saw back in 2011. This tells us kind of, that upside target. It's 57 was the upside target for it. And then we had to drop down to intraday charts, which you and I did in a previous video that pointed to around 72. Right now we're in bubble phase. So silver can pop and take off. And I do still think we could see one big push in silver could spike potentially, past 100 very quickly. I think it could be short-lived. I think it'll be an emotional driven move. It'll be pure FOMO. Everyone piles in to get involved, and then it'll probably reverse and come back down. But I do believe in what you said and some of your other guests saying, once it does top out and pull back, I do believe it's going to hold above 50. I think it's broken that threshold. And so now I do think it's going to naturally, it's going to become the new floor for silver. maybe down to 40 to 50 will be the new floor, which is great. And it'll build a base. And then I think over time, when it starts to break out, then we'll be off to the races to 100 plus for silver. I guess, again, I'm really bullish on metals. It's just short term. I'm getting a little nervous, and we just have to let this bubble burst. And then we're just going to have to digest and wait for the next foundation, like the next base like this to build out. Does it take 6 months? Does it take 5 years before it starts that next big run? We don't know. But the volatility and the crowd psychology of people moving in is telling us we're on the last few bars when it comes to the monthly chart. We probably have 1 or 2 bars left, and we're going to see the metals probably top out across the board for potentially a year or so. And we did the exact same thing with gold. If you look back at gold, and we just go back to this previous chart right here, it's just amazing how these charts, play out. We had the rally up, and then we had this pullback, and we carried this over. And so we got long gold for a quick trade with 15% right up to our target here. It had the hiccup, and then it had the blow off phase before it went into a big correction. So the market, it's kind of rotating. We're seeing it happened in gold first. Now it's happened in silver, platinum, and palladium. Gold has had a pullback, a fairly sharp pullback for gold, but overall it's still, has a stronger chart pattern. But the charts are really strong here, saying that the trends are still up, but there's a lot of volatility. And people, I think, there's other two camps. There's other people who just buy gold and they keep it forever. And, they think the world's going to fall apart and all that stuff, and they're never going to sell it. And then there's other people who want to try to navigate it and trade it. And we could see a very big correction in 2026 in the precious metals space, which I think is going to be a huge opportunity. And I don't believe in holding something if the trend turns around. So I'll be looking to exit physical metals. I can always get back in later. But I think 2026 is going to be a difficult year for metals.
For traders like yourself, whenever anything gets more volatile, like in the case for metals, is that a scenario or a reason for you to get in or excited about getting into the market right now, as opposed to you're out of the market because of this heightened volatility? Keep in mind the prices, especially for gold, for example, have been consolidating sideways for quite some time, and we're finally getting this up and down volatility that traders dream about. So how do you see it?
Yeah, when there's this type of volatility, like gold still has a very nice chart. I still think gold has got the target to reach around 5,200, I hope, to the upside. But when we get this type of volatility, David, I really don't want to be holding stuff because I know it is a roller coaster ride and it could reverse. It's usually a sign of weakness. It's usually the market is running out of steam. There is a reversal coming. And the thing is, we're in this parabolic explosion phase in precious metals. And you just have to have your finger on the trigger. And I'm remaining long. But as you said, this type of volatility, I don't really like to be involved in stuff when it's like this, because now the underlying trend is still up. We're just going to ride that trend until proven wrong, till that trend has changed direction. But you got to be cautious because this type of price action is pretty scary. And the monthly chart of silver is such a great way to look at what's going on. When you zoom way back in time, you get these giant spikes that go straight up, and they usually don't end very well. And I keep seeing, I mentioned, this the other day online, and of course, everybody's like, this time is different. This is, everybody says that each time. But to me, this is a very crowded trade. People have all moved into everything that says the word metals and mining into it. We're seeing just stocks and everything shoot higher. But I'm very, very weary of where this will be probably 2 or 3 bars from now, which is 2 or 3 months. January is a huge month for the equities market. If the month closes positive for the candle, we usually have a positive year for stocks. If it closes negative, it could be down. You and I, in our last talk, we talked about the cycles at play, the Benner cycle at play, that are pointing to precious metals and the stock market and the economy weakening and pulling back. And, if we were to just look at this is a monthly chart of silver that I kind of already drawn on. This red box brings us up to about 5,200 in gold. In the perfect storm, gold will move up to 51 or 5,200 in the next month or two. It'll be a very explosive move. Who knows where silver, platinum, and palladium will go? They could go very high. But then we're going to go into a big correction, potentially a 20 to 35% correction. very similar to what happened in 2007, 2008. We saw that pullback, and then we start into another multi-year big move up where I think we see $7,500 gold and beyond. So I'm still really bullish on metals long term, but I think we're going to walk into this roller coaster ride in 2026, because when gold has these parabolic moves and breaks out of these ranges, just like it did in 2006, 2007, it's usually a warning that something bad is brewing and unfolding. And so gold is pricing in for that. That's why gold has gone from 2000 to, 2200, 23 or 4300, is because it's already pricing in instability, things breaking down. And I think there's some upside. I know you and I, when we talk about this, and I always reference 2007, everybody's like, well, this is nothing like 2007. And I fully agree. Price does the same thing. It doesn't matter when somebody hits that sell button or the buy button. The market doesn't care what the news is. It's either people are buying from greed or selling from fear. And you just have to identify this. So there's no doubt the market condition we are in right now for precious metals is different. It always is different. And there's definitely some very strong signs that something big is brewing, with lots of gold going overseas to Shanghai. We're seeing institutions. We're seeing, a lot of big buying, but by big firms and things, the central banks, right? So there's definitely something brewing. But again, you can't just buy and hope. People have been waiting for this move in silver, and a much bigger move in silver for like 20 years, 25 years since I got into this. So I like to take profits, play the charts, not the expectations or the news.
Gold, similar question for gold, but gold has not had this kind of parabolic move in recent weeks, but similar question, Chris.
Yeah. I think this chart kind of shows it. I still think we could see gold move up to 51, 5,200, and then I think it's going to pull back. I think that's going to happen in 2026. The pullback might be short-lived. It might only be 3, 6, 9 months, and then boom, we're back off to the races and heading higher. But obviously, if it does pull up to this 51, 5,200, it will have a really steep correction, I think, a very sharp one, and it'll be a huge opportunity to either buy more or to get back in, depending on if you sell, once it starts to peak out here. But I do believe we're going to see gold try and grind higher still for another month or two. And then I think we're going to see a very sharp pullback. But I think by the end of next year, gold will already have bottomed and same with silver, and will be moving higher. And I think it'll be a great time to get into, I think, miners. I think that's when miners are really going to explode. They're going to build a base here over the next several months or 2026. And then I think we're going to see a very big move together. So I think by the end of next year, the precious metal space will be very exciting, similar to what we saw in 2007. It's fairly short-lived correction. And then boom, you just head off into a multi-year rally. And you'll want to own probably a lot of metals, a lot of miners, and probably uranium and whatever the new big sector, which will probably be like data centers and AI and robotics, during the next major bull cycle.